Hello, traders. It's 8:04 a.m. on the 14th of May, 2019. There's a lag here. Okay, back in business. All right. Hello, everyone. It's 8:05 a.m. Chicago time on the 14th of May, 2019. It is Tuesday, traditionally one of the most volatile days of the week. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. You should be able to hear me loud and clear. If not, then check your ear. Oh, just kidding. Market is market stance this morning is really mixed. There's a slight edge to risk on. We're seeing crude pop up 50 cents, up 0.82%. The Euro Stoxx 50 up 24 points. That's about 0.75%. The Nasdaq's up 56.75, about 0.8%, and the S&P's up 14.75 points, or 0.5%. It looks like the Treasury notes are up half a tick, and the bonds are up one tick, with the Bund up 14 ticks. So overall, just a mixed bag, really, for the components that I watch. One thing I wanted to mention yesterday that I didn't, keep an eye on those banks. The banks seem to be kind of in a secret trouble forming kind of behavior right now. If you look at Deutsche Bank and others, they seem to be again on the brink of having a pretty bad move. So keep an eye on that. It's with this trade stuff, I think we're being distracted a little bit by the underlying sectors and the health of each major underlying sector. In any case, this morning we come into this, and it is mixed, with the market really wanting, from what I see in the order flow in the overnight session, it's really a market that wants to pop higher. It just needs an excuse to do so. And that's really what was predicted for yesterday on scenario 1 and 2, and those both failed. We did not get the bounce that was expected. So overall, that's how things are shaping up. We did get to 2,800 overnight. We hit that century figure. The low overnight in the ES is 27.9975, and we're currently trading 28.2250. I expect that there will be some pretty good opportunities today. Again, just watch your risk. This is not suitable for everyone to trade futures, but lucky for us, we have the micros for the indices to reduce our risk by tenfold. So be smart. Don't just treat it like a sim in there. It's real money, and it's an opportunity to refine and improve our approach, our system, our process. The overnight session brought us a couple of key figures. The German inflation rate year on year came in at 2%. The consensus was 2%. Great Britain claimant count change came in at 24.7 thousand versus 24.2 thousand expected. The German Zoo economic sentiment, a pretty major number, came out at 5 a.m. Eastern. Expected 5 got negative 2.1. It's definitely causing a bit of a lag in the DAX there. And then the U.S. had export prices, import prices, and those aren't really major. Looking ahead today, we get Fed's George speaking at 12:45 Eastern. We get the API crude oil inventories after the close at 4:30 Eastern. I think this isn't correct. Let me just fix this. All right. Yep. Well, it says here 5:30, but it should be 4:30. But and then the Australian Westpac Consumer Confidence comes out at 8:30 Eastern. Several numbers from China this evening: industrial production, retail sales, FDI. That's what's ahead. Again, there's always an opportunity for a tweet here or some news release from from either the Chinese or the U.S. government. I would venture to guess that this isn't going very well for either party, because both of them are now subsidizing different parts of different sectors of their economy due to these trade talks. Let's move on to the review. That's interesting. Well, I want to move on to the review, but somehow I've lost the video from yesterday. Give me a second to bring it back up. Of course, all of you have access to these videos at any time by going to my channel on YouTube, youtube.com. I believe it's /user/futures trader 71. 1 second. Here it is. Let me just push through the ads. Some guy vaping. Sorry about this. This is usually queued up, but for some reason this window is closed. Not very organized today. Not a very awesome impression here. So this is from yesterday right here. So as you can see, the two primary scenarios were really a test down into 1350. That's an MC point of control. It was supposed to be around 1350, or 1350, 2814. Expected a bounce back up and a push into 2858 as the primary piece. Now, yesterday we did get a bit of an open drive off the open, and it really started to look like we may push through that 58 and start walking up into 74 or so, and it ended up faltering. So these are the three main scenarios. None of these worked out. It's pretty rare that none would work out. At least one of them would show some life. But yesterday, as we look at this, overall, you could see there's an open drive here. Actually, you could see it better in my trigger chart. Let's pull that up so we can see what that looks like. Here we go. We open up at 28.2675, and you could see this drive. You could see that it could only take a tick. It could only down tick one tick before it pushed up. The weekly low is 28.26, and so this I was treating as an open drive. Here's an early tag of a mid right there, but this doesn't qualify as a setup because we don't have that impulse just yet. The initial push was only about 4.25 points from the low. We did get a mid tag right here. Looked pretty good. All right, that was the first opportunity to get long, and it worked out. We pushed the 33.75 high. That would be our primary target after the first risk scale. Remember, for those of you who listened to my talk on Futures IO about the micros, I went over this plan. And also, for those of you who watched the Trading Futures with Anthony Crudele video, I go over this exact setup with him. I show on a particular day how the setup lost on the first trade, scaled and stopped on the second for a minor win, and then was a full win on the third. This is kind of a similar scenario. We pull back to mid here, and we push this prior high. Again, the prior high becomes the key target. And then, so here we're looking for 35 as the key test area. So there's the 35.50, pushes to 35.50, and we finally managed to get up to 38. But the 38 finds sellers, and we get our first impulse down right back here. So now we're off the longs, especially if it breaks through the mid. We're off the longs, and then we start to look at shorts. So here's the key impulse down. And so once we get this, we do not look long anymore. And now we're trading against major areas. This is our key stock zone. This stock zone has the opening swing low, has the open, has the weekly low, has the prior low. And that would be a key area for a retest. And that's the first area I'd be stalking short. The secondary area would be 29.50. So there's a response there at 25.50 for continuation, and so on and so forth. Of course, I'm not going to turn this into a walkthrough, but you watch as the market pushes into that mid. There's the mid. There's this key response area. And the mid is at 25.75. It's pushing to 28.25. Still looking for it to turn. Still looking for it to turn here. Pretty well defined risk. And then now we're looking for 13.5 to be taken out because that's the low. That becomes your primary target on your second lot in the MES. There it is. So you got your second lot. So if you took one for 3, the second for 13.50, your theoretical average or scratch point is above 32 at this point, and you can just sit pretty and wait for the next move. So nothing for you to do here. You can see that it's just struggling. The upward rotations are just struggling to hang on with a high probability touch at 2800 at this point, and then it gets to 2802 and it stops right there. Okay, and then it starts to try to float up. But even when it tries to float up on multiple attempts, it's not able to. So here's the mid right here. That was the first key trade, short. And then here it is again. The mid is the blue line. This is the blue line right here. Here it is again. It's just buyers are just not able to rotate things up and the market up and hold it steady up there. Point of control shifts down, and we have a pretty balanced day. Pretty balanced day with the point of control right on top of the MC point of control. See this black line here? This is an old MC point of control, and we built a point of control yesterday right on top of it. The market is accepting that price and is balancing, and that price now becomes a key area for today on a pullback. That becomes a key bounce area coming in. Anyway, that's probably more review than you had signed up for as you tuned in, but it's really important not to do this hindsight 2020 thing and kind of see things as they develop. One of the things noted yesterday is we opened right here. This is yesterday's day session. This is the overnight. We opened right here and we pushed up, but we ended up pushing down and staying below the open, yet the delta was positive all day. And it's hard to see. It'll be better seen right here. So if you look at the delta here, as the delta starts at 0, which is at the open, which was at 28.2675, and you could see that the delta poked down on this move lower, but from there it was really channeling up. What does that mean? That means that the aggressor, not more buyers, please don't say more buyers, that really irritates me. No, I'm just kidding. It is wrong, though, to say that there are more buyers and therefore the delta was positive. The more aggressive participant yesterday was the buyer, and as you could see that as price went down, there was some lifting, more aggressive lifting than there was hitting the bid or selling into any bid there. So what this is indicating, what this is potentially indicating, is that the sellers were operating at with smaller lots, and that the bigger money was coming in and potentially buying this up. The aggressor is clearly a buyer. And that could be a hedge against a short position elsewhere or whatever. We don't know. We just see that the delta here finished really strong yesterday for a down day. Okay? And this is what often happens. We saw this in the RTY before the quick push up. It actually did this for weeks, where it was kind of pushing sideways with the delta pushing down, and then it finally turned up, and then finally price caught up with the delta, with the aggressor at some point. And what we have here yesterday is price just facing down, price staying below the open, yet delta is just very strong. This is not something we can trade on, in my opinion, because it can keep going for another day or two or three. But it does show that there's some accumulation on the way down. I mean, if you had to fill 200,000 contracts long, the best day to do it is a down day, especially a grind down like this, because you get zero slippage, pretty much, just working 100 lot or 100 lot, lifting 100 lots at the market, letting it go, lifting another 50, another 50, another 50, another 100, another 100. And that shows up as a positive delta as price drops. So you're not sitting there with a big bid holding up the market and forcing sellers to hit that bid to push through. You just let the market fall and you get better and better prices. This is kind of the most efficient way to execute a large trade by many participants. So to me, this is something to watch out for. It's one of the indications. Now the value has shifted down. Value has moved from up here at 64.75 down into 28.13 or so. So overall, we have a lower low, lower high. The trend on a day basis for yesterday, we haven't established a trend yet, because yesterday was the first day on a lower low, lower high. Today's what establishes the trend if it continues. But overall, it is establishing a lower acceptance. It's moving towards 2,800, but with the delta being positive, I would be cautious slamming on the short side here, especially on a swing basis. Okay, or selling calls at this point would not be the wisest thing, in my opinion. So we went over that. The overnight, I'm going a little long here. The overnight session, you could see this coming in and just lifting pretty good. I mean, look at these lifts right here with the delta in the overnight session. And so it's, again, really be careful getting short down here against 2,800. This is an area that we're likely to see some lifting. The overnight session had pretty good volume. It has about 2.5 times the norm. And it seems to be a trend type profile with the point of control in the upper quartile of the range. This is more of a short covering. We're seeing some short covering action potentially based on the profile shape here being a P shape. Okay, so I expect that to continue. What is our plan for today? Let's fix this scale again. Today's one of those days where I have to be cautious trading because it doesn't seem like stuff is working right. All right, so what do we have in terms of the plan for today? Again, trade your plan. What are we looking for? We're looking for responsive selling right off the get-go. So remember, the overnight session has pushed and pushed and pushed, and we're below that 28.25 area. I'm expecting an attempt higher. I'm expecting a response to bring us back into this 1350 area. I'm expecting this to test the value area from yesterday, which is valid. And then I'm looking for a bounce up. I'm looking for an impulse up. If we don't get that impulse up, then we're likely to push through 2,800, and 2784.50 would be the next target down. So if we do get, and that would be scenario 2, if we get the impulse up, look for a tight flag up there and a push through the overnight high, and then a squeeze into this 35 area from yesterday where we saw a response 35 through 37. And if we free up from there, then 2850 2850 becomes the target, and that's our primary scenario. Okay, I'm looking for responsive selling at first, but I'm looking for initiative buying overall. Okay, the market's likely to balance itself out. So same scenario, drift down, push up. On a secondary scenario, I'm looking for this to fail to the downside and then squeeze through yesterday's low through the 2800, pull back to 2800, and then continue down into 2784.50. If it has some gusto in it, the big area to test, the key area to test is this 2768 down here. So that would be scenario 2. That would be a pretty good size drive. But you know, there's because of the conditions that we're in, there are scenario 3 and 4, but I'm out of time. There's only 5 minutes to the open. Thanks for tuning in. Again, risk is king. Okay, so just remember, it doesn't matter what you think the market should do. It doesn't matter what it's done. What matters is that you have enough money to come back and trade tomorrow. Execute your plan and exploit your edge tomorrow. If your account is dead, then you're not going to be here. So focus on that. Focus on taking measured risk. There's a little extra volatility here. It does cover 10, 15 points very quickly. So this isn't the kind of market you want to sit and kind of wait for things to come back. Define your risk. Tell yourself this is where what I plan to stake. My stops need to be widened to 4.75 points at this point, so I need to cut size down and manage things that way. Good luck today. If you have a small account, as I've said many times, if you have less than about $3,500 per contract, you should be in the MES. Okay? Good luck.